Hey, Rod here for Daybreak Investors. So this is going to be the weekly analysis. And what I'm going to talk is pretty much what happened this week. I'm not going to go over fundamentals very much because we've been having a lot of news, a lot of events that are affecting the fundamentals. And I'm gonna go today pretty technical, not only a technical analysis, but also data. So I'm showing this time, I chose to show a very clean chart, okay? Where we can see here on the daily time frame, a very clean support zone. And this is Friday. And we just reached again the support zone, okay? So this is a meaningful zone. We had a lot of touches here. You can see better on the daily time frame how the support zone is meaningful for the moment, for this moment in time we're living now. This support zone acted as an important support zone for a while. It was a resistance zone a while back for during this time. It went back to support zone during this time. Okay. And this thing can go way back. But this is the momentum we're seeing now. This is a support zone. And this is what happened Friday. So the good news for the bulls is that after we reach this support zone, now futures are positive. Could that mean something that we're really gonna start prices shooting up again from the support zone, just like we saw what happened here in the beginning of October? Only time will tell. But one thing is for certain, this is meaningful. And one can argue, oh, this is under the 200-day moving, 200 daily moving average now. And this is another meaningful argument for the bears that keep arguing that the downtrend may continue. And they may be right. This may be a valid argument that instead of shooting up like I did it here, I keep doing this thing since the beginning of this group with the Facebook posts and then videos, starting from beginning of October. I've been doing this different ways. Okay, actually it doesn't matter much, but in the end I still believe we're going to reach the price again of 450 or 460. We're gonna test this price again based on the weekly time frame. Okay, but I want to bring your attention now uh, to a seasonality tool that justify not only what I'm seeing on the weekly time frame. Okay, so the weekly time frame, I showed this so many times. There is a channel, there is an uptrend on the weekly time frame that hasn't been broken, and there is a short downtrend. The downtrend is much shorter than the uptrend. But I want to bring your attention now to Thinkorswim. This is another charting tool that I also use. I'm here on a simulated account. I'm not going to show you my right account, okay? So this is one of the tools I use for trading. And Thinkorswim, if we go, it's showing me the same information for SPY. So if I go again to the weekly time frame on Thinkorswim, okay, and I use my drawing tools here to first plot the downtrend channel here. So this is a short-term downtrend channel, right? Okay, there is no doubt that from the week of July, end of July, to now, we are having a short-term downtrend. But can we also agree that we had an uptrend channel from this moment in time to July? And this channel is much longer. Let me change the color of this channel real quick. So let me put the colors in green. Okay. So one can argue this channel might have been broken already and was replaced by the shorter term downtrend. But this is this zone, this is support zone we've been talking about on the daily time frame, right? So let me go back to the daily time frame. This zone is still meaningful. This zone hasn't been broken yet, right? So speaking of seasonality and speaking of data, if we go to this chart mode and choose seasonality on this chart, we're going to see an aggregation of the tendency or trend of the last 5 years. So it tracks what I've been saying, that September is a bearish month, right? And sometime in October, we have Q4, we have a bullish Q4. So this is what's been happening in the last 5 years. And one can say, okay, so this is 5 years. Could this be a coincidence? Could this be a new trend or maybe a newer trend? If we go back 10 years, so this is data aggregated in 10 years. This trend is still tracks. Sometime in December to the end of this September, beginning a few weeks in October, we have an uptrend again. And same thing is happening for 20 years now. So the graph is quite smoother. Again, we have a 20-year aggregation of data aggregation now, and same story here, same trend. End of Q3 is really bearish. Beginning of Q4 is bullish. There are outliers. This thing doesn't happen every year the same way. When was the time this thing didn't happen? So if we go back to the daily time frame, we see that the same trend happening year after year, sometimes in October, okay, bullish Q4, bullish Q4, bullish Q4, bullish Q4, bullish Q4, bullish Q4, and so on, so on, so on, until what was the biggest outlier here? That was the biggest recession that happened sometime of, one can say, end of 2007, maybe sometime in 2008, where the prices really start to close consistently under the 200 simple moving average. So we are on the weekly chart. So this is going to be the 200 daily moving average, and finally found its bottom here on March 5th. So this is an outlier. These are the months of October, right, for on the 2008 and 2007. So those are the biggest outliers. And this recession was a recession that was really confirmed, because even on the weekly time frame, prices were consistently closing and trading under, in this case, the 200 weekly moving average. And just so you can have an idea how bad this real recession was, if we get this tool right over here, let me see if I can find this tool real quick. Oh, okay. So this is going to be the price range. I'm sorry, it took me a while. So this was a retracement of 50 something, almost 60%. When we go to back now to end of 2021, beginning of 2022, we had a big retracement, right? Much bigger than the retracement we had back in 2007. But look at this. It's a different context. You see how more volatile and how steep the growth happened on 2001 and what happened in 2021. I'm sorry. This is from 2000, sometimes 2020, 2021. This was a very steep growth. Again, a very steep, and this is not something. This is a very different growth, right? That we saw between 2006 and 2007. So one can argue that was worst. But this is a different time. A lot more people are trading. SPY is the most traded index in the whole world. And this is a show of real, I can say this is the show of trade, because the data, the price is moving much faster than it used to move 15, 20 years ago. But the important thing is that there were only a few weeks that the price went under the 200 weekly moving average. If we go back to 2007, 2008, and I'm sorry, I keep getting back and forth. Look how many weeks we had the prices under the 200 weekly moving average. So folks, that's what I'm coming from. It's not only price action. It's not only support. It's not only resistance. It's data. And this may or may not happen. So according to data, the last 20 years of data, this can happen. So this is the confirmation of 20 years of data, a bullish Q4. But we can have another outlier here, like we saw in 2008. So maybe we're going to break this. We're going to test again this previous support zone, and now may become a resistance, and we may go way bearish now. So these are the two scenarios that may happen. But the 20 years of data, it still favors the first scenario, not this one. It may happen, but this is going to be an outlier. And so far, even with all this fear in the market, VIX is still under the 200-week moving average. Okay? On the daily moving average, it just got up. But VIX on the low 20s doesn't mean real fear yet. Anyway, we have a lot to see. Folks, happy trades. I'll see you sometime next week. Thanks a lot for watching.